So the question was, at the stage we're investing, what are we actually investing in? And we are looking for companies that we think have the both potential to be venture scale businesses, but also that there's near-term opportunity to kind of own their own destiny. So of these two companies we funded recently, one was pre-product, pre-revenue. But these were people who'd followed the indie stuff for a while. They'd been at big companies. They were first-time founders, but they kind of watched a lot of their friends make the same mistakes. So when they reached out, it was in a fairly hot category, but they reached out saying they really wanted to build like an indie type of business. Zero, like when we invested in that, we invested in nothing. There was nothing, not a line of code written when we invested. But super credible founders and really committed to building, on their own terms. And so using services up front to bring in cash flow, to help fund the product and to kind of accelerate their learnings in the market. And so suddenly they had like the who's who of potential customers were not just potential anymore, they were real customers, paying for services and excited for the software. And so they kind of found themselves in a position where they had grown so quickly and the demand was so much. Through this indie path, they actually ended up deciding to raise, they had so much interest in another round of funding, they ended up raising like a proper Series A from a dead start. So what attracts us to the pre-product, pre-revenue people? It's probably their kind of internalization and their inner wiring around how they want to build a company, and then two, do we think they're in a market that really does have that kind of uncapped potential that's sitting inside of a lot of new and emergent technologies. This is this week's episode. We're talking to an indie portfolio company called Dreadnode. I got to know the Dreadnode team when they slid into my DMs about a year and a half ago to talk about where they were in their careers. One was currently at NVIDIA, one was doing some consulting, and they had a lot of ideas and expertise around AI, machine learning, and security. One had developed, Will in particular, had developed a very popular open source project for AI red teaming. They were working through a few ideas. We got to know each other through that process. I got high conviction that they were two people who could really figure out how to leverage their expertise into kind of a new and emerging field of AI security and red teaming. And we ended up putting together a small investment. I think our initial investment was around $750,000 to lead around, for them that was pre-revenue, pre-product, but gave them some runway to really go test some of these ideas that they couldn't shake. The interesting thing with that check was they took it thinking it was going to be their last one. They had really focused on finding customers to validate this with. They took on some service work with those customers to really figure out what problems they had and how to solve them. That quickly led to a significant amount of revenue in a very short period of time. Soon they started turning away customers. They started not being able to hire people that they wanted to bring onto the team. They were getting all kinds of inbound interest from investors. So they decided to leverage that momentum with investors to instigate some conversations and start to see what their options might be. And then one day I got it was a call or a text from Will that said something along the lines of, "Would you be mad at us if we raised money?" And I love that because I think he'd internalized so many things as it related to indie, and one of them was a misnomer, which was that you were never going to raise money again, or we'd be upset if you raised money again. And I think what I was able to highlight then, and hopefully comes out in this conversation, is that it's not about never raising money again. It's about never having to raise money again. It's never having to focus on raising money again. And in this situation, they were able to generate enough interest from enough investors to get the terms they wanted, with the partnership they wanted, the money they wanted, to really take the company to the next level, and they were able to do it all on their terms and timelines. So for me, that's an incredibly indie story. It's one that not only allowed them to kind of tee up all of those right things as it related to the structure and deal, but it also allowed them effectively to skip multiple rounds of interim funding and go straight to a fully funded Series A. And that's part of the promise of Indy and the focus on building the business and the product as well, is that they didn't spend any time taking coffee meetings and get to know you meetings and always be raising and lines not dots, none of that. They were able to go into a fundraising experience with a lot of leverage and to create a really efficient process that netted them exactly the terms they wanted with the partner they wanted. And so we decided to kind of sit down and unpack both their first experiences in entrepreneurship, kind of what it's been like to work together building and shipping products, what it's been like to do so with the kind of indie mindset on, and then kind of what surprises they had as first-time founders who were wading their toes into the fundraising market really for the first time. So what were the surprises? What were the things that they experienced that were head scratchers around this process of raising this round? It's a great one. It gives you a good sense of some of the people we work with, especially these technical founders, why Indie resonated with them, and how they use that Indie philosophy to really put themselves in a position to win. So I hope you enjoyed it as much as we enjoyed making it.
You get the associate. They're basically insurance salesmen, right? Like, to a certain extent. So you show up and you're like, oh, okay, this kid's like 25. He's just canvassing, or he's like been given a task, and you're like, you already know that he's not the person that you want to talk to. Our attitude, I think, has been one of like educating them about the space. Like, we try and leave them with a nugget, whether or not it helps them.
Do you find the variance in that insurance salesman slash, kind of smile and dialer, that there's a wide variance in terms of the information they have or the expertise they have coming in to the call? Or are they all pretty much starting at, like, they read a Gartner report?
Yeah, they want something to talk about at parties. But you already had a name for it. It's like Smiler and Dialer.
Yeah.
Right? Like, that's...
I've never heard that before.
I haven't either. So what's the other archetype?
The ex-founder. It's that idea of like, listen here, kid. Even though they're
I've been a founder, so I know what it's like, so I can help you.
Yes, they kind of like, let me be your friend because I've been a founder and I get it, and like, let me tell you about it. And then like, the only place you arrive with those people is that like every single experience is so completely unique that like nothing that they're going to tell you, very little that they would tell you about the process from like a fixed factual place is like going to be all that helpful, because even when they tell you and you walk away from a meeting being like, oh, that was a good piece of information, it's not but a week later that you realize that there's a completely contradictory reason why that's like maybe not useful.
Yeah, like everyone's giving you advice from their own experience,
and it like conflicts, and so it's like you're ping-ponging back and forth, and I think those people are like particularly noticeable.
Or people will be like, if you need help at 11 p.m. at night, like, you can call. Like, what am I going to call a VC for at 11:30 at night?
Yeah. I'm rebuilding a Kubernetes cluster.
Like, yeah, it's just...
What do you know about kubectl? Have you ever installed an NVIDIA
So I'm
GPU?
waiting for that moment where...
Well, but you can imagine at a certain scale, because you guys are what? You're a total of 6 people?
9.
9, okay. So
8.
You're going to get to a scale where maybe at midnight you get a call from one of your employees, your executives, or customers that says, something's on fire, I'm quitting unless, I'm ending our contract unless. Couldn't you imagine in that moment you'd be like, oh,
let me call my VC.
Archetype VC is really going to come in handy right now because I'm freaking out and I have no idea what to do in this situation.
I think it maybe actually says more about them, like the advice, not that the advice is poor, but it's like they're giving advice to you from the perspective of when they were at the end of being a founder.
Okay.
But it's like, I don't need that advice now. I don't need you to tell me that I can call you at 11 p.m. because that's not the type of thing that I want from you or that I need from you.
Do you find that they try to start giving you advice in that first meeting when they are just barely meeting you and when they don't really know that much about your company or product?
The founding folks, the founders do.
Oh. And I wouldn't say it's focused on, they tend to shy away from anything that would be like, I'm not going to tell you about your domain, but I am going to tell you about doing the process of VC. And they have a lot of opinions about that process, like everyone does. I think it makes sense, right?
Okay.
It's a big part.
So dad, smile and dialer,
then you have
former operator, but sounds like former founder / operator.
Yeah.
What would you classify that? I don't know if you would call, they're not post-founder, they're like So I'll lay out the quality. This is one of the category I put them in, but like intimidating, like the sorts of people that are appealing to you from a holy cow, you're like a pillar in this industry.
Like tier one.
Yeah, but specifically the people at tier one. That was a surprising portion for me because it wasn't about just them being a tier one. It's like they would bring somebody into the room that was so qualified that you would suddenly get nervous even presenting yourself. You know, because like every other VC, you're like, I can talk circles around you in this technical domain. Like I understand you know the VC process, but like you're not going to be able to tell me about the stuff I'm doing from a technical side. But yeah, the tier one level, you would get people in rooms where it's like, I legitimately feel like I need to.
And these were partners of those firms, or these were like advisors to the partners of those?
Partners. Okay. Yeah, so like we had a bunch of meetings with these tier one VC. They were just much more polished. They understood you and your business, and they could like take apart your strategy, and they could see the individual components.
It felt like you were getting undressed a little bit. And that was like really rewarding but scary at the same time. You'd walk away from those meetings being like, I want that person just because I want to know what their guidance will be in the future. Like you want more of what they have to offer. You're not sick of hearing from them. So I don't know what category. I mean, maybe that's just the tier one.
No, but in that meeting, what did you feel like it was that kind of deep level of expertise they had? It was like the way they handled themselves.
It's just insight, like they have good insight and feedback, and like you maybe don't agree, but like that's not what we're.
Was there any one or two from that experience, like the insights that someone brought to the table that either you hadn't considered, like anything memorable from that archetype that really stands out?
Yeah, they just weren't concerned with financials. They weren't concerned with. They were like on to the next thing, right? So it's like they were saying, "Hey, I have this seed. You know, what's the tree going to look like?" Yeah. They were like thinking about that tree.
Oh, that's
or maybe they have a garden, let's say, and like they're thinking about like how you fit. Where the other archetypes are more like, "Hey, I love you, but we need to work within these constraints." Yeah. And you're like, "Well, it's not necessarily helpful." The tier one folks are more about accelerating you, and the other archetypes are maybe more about like getting on a train.
Or like maybe even placing you. To do the garden analogy, it's like one group is really concerned about where you're going to fit in the garden. And the other person is like, I have a beautiful spot of land for you, but you need to be the biggest tree. And up until then, you've just been so focused on like what it means to even start growing that it can feel unnerving to have somebody come in and be like, I see you as like a massive company. And you maybe don't like what parts of that company look like right now, but I can talk to you about it and we can discuss it, and you can walk away from the conversation feeling like, yeah, they see me as something big and they're not worried about constraining me in this place. But what's scary about it is like maybe what that growth like ultimately looks like. It's like, what is the end of, they're making you think about like the end of the road, not the now.
That's interesting. Maybe what I'm partly hearing too is that there's a certain class of VC that focuses on who you are up to that point. So like, what do your numbers look like? Who are your customers? What does the product look like? They really obsess with like today and what the business looks like today. And then maybe there's that people maybe you connected with more, or that you felt like would be pushing you in a more compelling way, were the people who were thinking 2, 3, 5, 10 years out, maybe even further out, about kind of where, what this could actually be.
Yeah, I think there's also this aspect of like team building where you want people who are going to add value, who aren't just here for the party. We'll give you good advice. Like I remember when, as we were raising, I was texting you like, you're like, hey, get into our data room, right? And it's like, participate in this process. Probably unfair to say like all tier one are like that. So maybe it's more about the individual and the way they like to run it, book of business or whatever. But I think
maybe say more about what happened. What did you think people would do with the data room, and what did people actually end up doing with the data room?
Space is so new that it is useful to be able to say, hey, you have big customers and you're doing cool work and you're clearly able to execute. Like that was important. I mean, it wasn't maybe like it was 2-3 years ago, where you have other companies in the space are really, a lot of money, people have warmed up to the fact that like AI is actually really difficult. And I think a lot of the early promises that these companies made and raised on like haven't actually played out the way people thought they would. There is this aspect of people are maybe felt a little burned, I think, from that experience. And security itself is actually quite a small industry. Everyone knows everybody, and your reputation is like everything.
I want to conclude one maybe summary thought I walked away from as we were going through all the VCs is like some people will benefit or like a particular type of VC. And I think there's almost like a self-discovery of we are confidently technical people and we knew that we were on this train whether or not other people got on or not. And so it felt rewarding.
The train you're talking about is the just overall trend, the business you're building.
Yeah, like
our vision.
Yeah, your vision for what it is you want to do.
Yeah. We're going to be in the future we know is going to exist 5 years from now.
Yeah.
And everybody we're talking to now is also going to be there in 5 years. And it's just about where you're going to be on the board when that 5 years arrives.
Yeah.
And we're really confident about like where our board position is going to be. It's just our strength in that position and like the acceleration we arrive on the way. And so to meet people who felt like they pushed us in just thinking more broadly about the company was a rewarding thing. And to kind of go back to the data room, it felt like it was I don't know, something that came up as an answer to an Excel book. And we were trying to slot in this idea that was difficult to communicate, which is like, I understand this industry feels maybe scary to you as a VC, and it's nerve-wracking to trust two people who say AI and security together and like aren't bullshitting you. But the data room felt like the only way we could maybe convey, like, go look at our clients, go look at this list, like, look at the raw facts about how old this business is and how well connected and successful we are. And I think what we got instead was people just use the data room to plug into their little Excel books, and they did the same thing they were going to do with or without that data, and it actually made very little difference. Like, I don't think the success we had with the people we ended up appreciating came from the hard facts. I think it came from talking about like the bigger trajectory.
Yeah, that's a good point. I guess a data room is really just it's a file share. Like it's.
I actually was surprised. I remember Bradley talking, and he was like, "Check out our data room." And I got into Carta, and I was like, "Dude, this is just a file share. Like this is worse than SharePoint. Like what do you? This is how you guys conduct business? Like what do you?
Yeah.
There's no charts or graphs. Just like you dumped a bunch of files in here. This is how we're like communicating about business."
You kind of got sucked into the fundraising process initially.
Yeah.
No, I wouldn't say sucked in. I said
no, but
like.
You know, like I remember like VCs had reached out, you took a few meetings, and then it was kind of one of those like, I guess we're fundraising.
Kind of. We went into RSA this year. You know, we're a small team, but have just like crushed, and it just was like, hey, we can't. This isn't sustainable for any of us, and so we need to hire. The capital became like a release valve for that. Enterprise sales cycles are really slow, like. So impossibly slow. And the tech isn't going to wait for you. From our perspective, it was like, let's just raise now. I don't want to do this next year. I don't want to do this 2 years from now. I don't want to do this during Black Hat. I don't want to do this after Black Hat. Like, we're just going to do it right now. We're going to set aside a month, go really hard on it, and come away with the best possible deal. And we did. We went super hard. We talked to 25 people in that, month, and people...
Going into it, if you had to grade your understanding of venture and like a proper fundraising process, because when we invested, that was not any kind of standard.
It was my favorite
process.
I liked it a lot. I'll tell you that much.
On the scale of 1 to 10, where would you have put yourself in terms of your understanding of what it was going to take from initial interest, from VCs, from you feeling this kind of pain of your internal growth already, like. Your understanding of the process of raising a round was probably what, between a 1 to 10? You're sitting where on the scale? I'm fascinated because I know where I would put you.
0? I don't know.
Wait, so 10 is very prepared or
very prepared, like deep understanding of the process and what it was going to take, and 0 is like, have never done this before, have no clue what I'm doing, maybe even a bit doe-eyed because all I know is what I've read on the internet about
And this is us now? Or
no, I'm saying like when you started.
Oh, when we started that?
I mean,
like,
0.
I think 0. And we probably made the most progress that I think most people would. Like, we learn quickly. So actually what I think is maybe a more potent thought is like, not only did we start extremely low, but I feel like we finished very high. Like, I feel like I got a decent exposure to really it's like small nuggets that you just interpret, and you don't have to sit with them for very long before they blossom into like a better understanding of like how the process goes, who the people are. And it comes all the way back around to like, you think there's a structure and flow and demand, and it's just back to people being people. And everybody's different, and everybody has different motivations, and the process is arbitrary, and there are no rules, and anybody can do anything that they want. It's how you want to feel about like the process.
Yeah.
Like there's a whole, and it's you and the VC both negotiating that thing. But at the end of this process, or I guess at the end of this last month, not that it would be a very long process. I'm sure 5 years from now I'll look back and think this was a bit silly, but it's like I feel like I understand myself more than I do VCs. Like it's like it forces you to think about your own positioning and what you care about, and like come to terms with. It's like you can get all the facts and logic, and somebody can give you advice and opinions, and you can get the, you know, your dad's VC and the tier one, and like at the end of the day, it all just comes back to like, I don't know, who are you as a founder? What do you want out of this process? You're not going to have every option in the world, and sometimes shit happens, right? Like stuff falls through, sometimes opportunities open up.
You know, we gave 25 different pitches, right? Like, and some picked up on it, and we had one really late that was like really wanted it, but we missed the mark on the partner meeting, and so we didn't get it. And that was just like, kind of view it like tournament play, you know. Yeah, you're in that moment, and you have that moment, and if you miss, you miss, and you lose. That's fine. Like that's just one game. You just miss one game, but that doesn't necessarily affect like your career. So I think for us it was like, let's just get this done. Whoever wins, and we'll go forward with them.
Nick, you touched on it a little bit. Were there any surprising kind of personal or professional or company related insights that came out of running this gauntlet over the last month and a half?
I mean, maybe on a personal front, like dilution comes up all the time in this process, and it's described so many different ways, and people talk about it so many different ways. But yeah, I think coming away from this, I was really struck by just how like personal that is, and how it's not even really a firm like this bad, this good to me, and this number means I'm happy, and this number means it's not. But it's like there's so many different ways you can frame what's going on financially, that you just have to find the framing that makes you feel confident. Because at the end of the day, you're going to walk back into work and have to keep building. If you can keep your headspace right and find the right context and the way to like think about the spreadsheets that are going to ultimately arrive in front of you, the like better off you'll be. Because like 6 months later, you're probably not even really going to think about the spreadsheets. And you can panic and be anxious about how you're going to feel a year from now or 2 years from now. But at the end of the day, none of that matters if you don't like get your head straight and like keep building. Like if you get stuck in that flow of like letting the financing take over your life and then tear you away from like the thing you were originally doing at the beginning, which is like making a company, I think I probably arrived at the conclusion like if you have confidence, things will turn out well, and 0.5% here or there in an Excel sheet is going to be like so little. It's going to mean so little if we do our jobs right, which is like the thing I want to do the most. Like I want the company to be so big that 0.5 percentage point like means so much and so little to me at the same time. Like it's more of a thing you chat about over dinner rather than the thing that keeps you up at night.
So a different reframing of dilution in your mind. Going into it, it felt very different than it ended up feeling at the end.
I think it was just potent how much the way you felt about it and the way you framed it to yourself was important. And it also, I mean, maybe to advise for people who have co-founders, that it's really important to understand each other's headspace too, and to know that the same framing that works for you won't work for the other person. That like you'll have different interpretations walking away from not only dilution, but like how much money you're getting, how all of your employees feel about it, how long you spent doing the process, how many meetings you took, how many pieces of paper you signed. Like the whole process really forces you to just think, how am I going to frame this to myself so I can stay focused and walk away confident in the future and excited about the future, rather than feeling like I failed or screwed up. Because there will always be a million ways to describe you failing the raising process, and in the same vein, there will be 100 ways to describe how you succeeded and really nailed it.
At the speed we were going, it was really important to just get it done so we can get back to building, because it really consumes you. And then, you know,
was that surprising to you, just how consuming a process it was?
Yeah, I was so pissed. Because it doesn't need to be that consuming.
Yeah.
Right? Because, like, okay, you have a call, then you do a thing, and then actually, when you get the term sheet, it's not even done. Like, everyone puts the whole thing on the term sheet, like, get that term sheet signed, and then there's this whole process of due diligence. Like, why didn't we do this in the beginning? Like, isn't that what the data room is for? Like, there's just inefficiency, like, everywhere. And, like, I understand there's, like, edge and inefficiency, especially when it comes to markets, but it's like, that was the frustrating part, was just like, okay, you know, you show up and you're, hey, we have things to do. Like, I can't dance with you for this whole month. Like, if you can't figure it out, like, I'm going to go find another.
What was some of the? It's like I said, I can't download this. Like, I can't.
Oh, yeah.
It's like, I'm not your IT guy. Like, what do you mean?
Wait, someone
this
couldn't
is my
download
problem.
a document?
They were like looking for an Excel sheet, and we had already provided them like some Google Doc link, and they were like, "How do I get the Excel out of this?" Done. You're out.
It's like
gone.
Wow.
And it's just like, okay, and maybe that's a good like filter, is you want people who are going to put in the effort for you
or align with you in a broad sense.
Yeah.
I was struck by like how just the raw initial opinion you got really quickly, or you would have lunch with somebody and things would go great, and then in an email, like, a tone would be off. And like, I think part of you wants to look at that and say like, oh, it's immature or short-sighted to like let those sorts of things affect it. But actually, maybe in the realist way, like, that is one of the more important things, is like, let yourself just be opinionated because they're being opinionated too. Like, why are we constrained and think like, oh, you didn't nail that meeting with me, but I will give you benefit of the doubt and like continue to work hard and send you email after email with documents despite me getting like a weird impression that maybe you weren't serious about this or you didn't think. It's like, I don't know, trust yourself. Like, play the game like you think the game should actually be played, which is like, find people you like who you feel like push you and make you think about the future and have resources to accelerate you, because that's like the whole thing is about.
Sometimes it really is just like a vibe is off. A meeting went bad. Like,
Yeah, it's weird tension. Felt like people were role-playing the cowboy of like, yeah, we just make decisions and have meetings and make this, but then it's like nothing ever panned out that way. So people talked like that's how the process would go, but the process wasn't executed that way.
oh, fast.
So I feel like you could delude yourself into thinking like, yeah, that's how every VC meeting just went different and vibes could be off, and that's the reason why the deal fell through. But I actually think you'd be kind of lying to yourself in like how unimportant most of that is when it comes to, you know, we would really hit it off with, you know, a couple of partners, and we would get to a broader partner meeting, and it's like, yeah, okay, there's 5 new people in the room, and you walk away from that and think, oh, I must have not made a good impression for those 5 people. But the reality is like, no, it's a voting system, and 2 people wanted you in, and the other 5 people were like, no, it doesn't work on the Excel book. Right. So they're the fall guys pretending like you unimpressed them, when the reality is probably that the whole thing was just a way to mask that 2 guys wanted to push an Excel sheet above a red bar, and that wasn't going to be allowed from like a policy perspective.
When you closed financing with us, you know, the idea was basically like, we're just going to go build a real business. When we invested, there was no product, there was no revenue, there was no, I mean, it was you two, there wasn't anybody else.
We're pretty good products. We're like,
Look,
we're valuable
I
assets.
think so. But pretty quickly, without going into specific numbers, like you, in 9 months, you built a very real business by not thinking about fundraising and just building the product. I know for the longest time, sit back and watch at this velocity you guys were creating and just marvel at it. I mean, it was really, you know, to my mind, I kept watching it and saying like, this really is kind of a prototypical indie style company. When we wrote that check, and when I talk about like what an indie company looks like, in many respects, I'd use you as the example, right? Like, you took an idea and an inkling and your insights, and you turned that into a service, then a product, but generating revenue very early in the process, closing customers. And I think at various times over the last 9 months, you've been cash flow positive. And then there was that moment where you felt like you let me down.
Well, I didn't until you didn't get into the data room. And then I was like, oh, okay. Like
there was no data room on my first check. What data do I not have?
No, sorry. I guess, yeah, if you context switch there. I was thinking like for this last piece.
Yeah.
Yeah. Because our purview was like, we're not going to raise. And like, I can remember when one of our first meetings, you were just like, guys, you haven't spent any money.
Right.
We're like, well, no, that's not. We got it for the stability. And then
I like having it.
I just like having it.
Right.
But it was also like when we first met, it was like, okay, Bryce is someone experienced who's been through this, who can add value like this is an area that we might need help in the future, thinking of it as a, you know, having Bryce on the team versus the capital that he could provide.
Did you think about it as Bryce, or was there anything about the indie stuff that resonated with you?
Well,
Is it
it's
different?
one and the same.
It's
It's honestly one of the most appealing. I think like meeting you, no one would think of you and indie as like a business or a concept or anything as separate. And to kind of maybe touch back on the VC thing, like we felt a lot of that. It's like we would meet individual people that we liked a lot, and then when the rubber met the road with them in terms of the larger group they were with, suddenly stuff fell apart. And we got a lot, you know, whether or not it was legitimate, we got a lot of people who are like, hey, we really like you, and I wanted to make this happen for you guys because I think you're awesome. Calling off whatever, you know, reason they might just say that to make you feel better. It was a big frustration. It's like, why can't I just deal with you? Why aren't you the person that's like making the call then? Like, you like us, we like you, we've met a bunch of times. So I think with Indy and you specifically, it was always just felt one and the same. So we didn't meet Indy and then Bryce, and we didn't meet Bryce and then Indy. We just met that concept at the same time in
like
person.
When we met in Park City, like, you remember you were just like, yeah, at the end of that meeting, you were like, yeah, I'll give you money. And we were like, wait, we're not here asking you for money. Like, we're here for lunch, right? So we weren't even realizing that we were pitching. Because we weren't. Like, that wasn't what we were doing. We were just like...
It's like we almost want advice more than anything. It's like, hey, this
Yeah,
process...
I mean, if I remember kind of how the conversation evolved, it was kind of like Will reached out, and it was almost like, hey, I have a very unique set of skills that are suddenly quite valuable. And I will save everybody the framing of how we talked about those skills or the context of the individual of whom embodies those skills.
I can't even remember that. I'll have to go back
it's the
and
name
look.
of our group text thread.
Yeah, I was going to say, don't.
Oh, yeah, okay, that's fine.
He was saving.
I got up. I did get up.
I'm trying to save you
yes,
from yourself.
Please.
I'm trying to save you from yourself on that one, actually.
Thank you.
Didn't even start necessarily as commercial. It was kind of like, hey, I'm this kind of person that's notable in this emergent field. It was almost like, how do I optimize some kind of almost like vessel for my talents that can monetize it in a different way than just a salary? Which as an investor was kind of like, you know, I think that's an interesting question. I don't know that that's an interesting investment. This was before, this is before we met. Kind of let those we kind of went back and forth a little bit and it percolated it. But I could see like the gears were going, that may have been where the initial seed of a thought was, but the ambition for this thing grew pretty quickly. So for me, you know, in terms of that decision, it was a pretty easy decision. It was, you know, as you guys know, I'm no expert in your area. I hopefully brought some people who had built and scaled companies that were at least tangential to what it was you were building to help kind of supplement maybe some of my blind spots. Watching the kind of arc of your ambition was kind of like, oh, this is going to be fun. There are some people who are so bogged down in like where things are today. I always felt like you two, upside was so unbounded with you two.
I always use this phrase of like, Will lives in the future.
Yeah.
And that could be really off-putting to people if you're like not ready for it. It's like he demands a lot and expects a lot because his mind is ahead of you.
Yeah.
And it's always a really rewarding moment when you catch up to him on occasion. Of course, by the time you arrive there, he's telling you about that's where he was 4 months ago. It's probably happened a good 10 or 12 times running this company where I've been like, Will, I get it. And you're like, yeah, that's what I was trying to tell you 6 months ago, but I'm glad you're there. It was always easy, and it continues to be extremely easy with Will. The simple idea of like a visionary is one of those terms that just, once you crack it open and all of this really complex stuff falls out, you find these nuggets where you're like, okay, I feel the attachments to that phrase. But if you tell somebody, it's like, oh, the person's a visionary, it's like, okay, there's a lot rolled up in it.
Yeah.
But I think for the particular angle of Will knows where he wants to be and knows he could get there, and for him, it's about problem solving, how to do it. Like, he knows point A, point B, and the question is not, I'm starting at A, where do I go? But I know where I'm going. It's just what path do I take and how do I like walk that path?
And I think for me, when we met, I got that sense, and part of the promise of Indy was always like, well, if you insulate yourself, if you're that kind of person, one way to be able to stay on that trajectory you want to be on, or execute that vision that you see that maybe other people don't see, is to insulate yourself from this fundraising environment where they don't necessarily see or even value the same things you do. And so if you can control more of your own destiny, then you can stay potentially more true to what it is you set out to build in the first place.
Yeah, but I also think there's like a really powerful component to, you can always walk away. You can always just say, no, like I quit, I'm done, I'm gonna go do something else.
Yeah.
Your job as a VC is to hand out money for returns. You need outsized returns. I don't, right? Like,
no, and
I want to do something I enjoy.
I watched that both from you as your personality, but also the position you'd put the business in, where, you know, as you started to wade into this process, there were times where you're like, we don't, like, it'll be harder, but we don't have to do this. We can walk away from this process at any point. And I always appreciated that about, you know, the position you guys had put the business in going into the process to begin with.
Yeah, people take on obligations that they don't always need to. And so even when we were raising, it was like, I'm not locked in here with you, you're locked in here with me kind of thing. And that's how I kind of, I like to run it, just because life's too short not to in some way.
I was trying to come up with the right phrasing for this earlier when it came up initially, but like the early thought I had was, it's almost like when your opponent makes a bad move in chess or something. It's not quite like that, because I don't see us as starting that process out of an adversarial space, but it legitimately, yeah, it came up as a function of like, oh, this is a move we can make. It's still work, right? It's not a free move to like start this process, but if we are going to capitalize on it, like, let's do it now and let's do it quick. It's like, I think there's a swiftness to our execution, and we carried that through, when we carry it through everything we do. And I don't know if it's a function of like us just being extremely technical people who happen to be running a business and learning the business side of it, or the raising side of it. But throughout the entire process, it was like strategically making moves, and at every step it was like, how do we give ourselves the most flexibility? How do we give ourselves the most freedom? How do we make sure this isn't dragging us away to, it's like always this trade-off, right? So we almost got to the end of the month and I was like, we just kind of have to finish this and or call it off, as a function of just getting back to it. I think Will said that point earlier, so we have to get back to building. Yeah. It's like this move, this like deviation we're taking, the downsides are quickly outweighing the upsides. Like, they're gonna catch us if we don't like take care of this. If I were to, now when I go be a VC, that's probably something I'll tell a founder is like, be really cognizant of not only how well you get, how much you get sucked into the process, but just make sure you're always taking a step back and saying like, what control do I have here? How do I create more control for myself? How do I create more flexibility and more options and more choices for myself? If you like keep doing that again and again and again, and it's hard, like the whole process I feel like clicks together more smoothly, and you don't end up on these long tangents of like, oh, we burned 3 weeks doing this, because at no point were we willing to question ourselves of like, hey, are we reducing our flexibility by like spending more than a day on this?
Yeah, too. I mean, even in the, like, we work really hard for options. Like, not outcomes, options. Because we know we can execute on any number of paths, but if you don't even have those paths available to you, then, like, you can't execute on them anyway.
It's kind of the playbook of people who have a destination in mind, but are finding the right path, right? It's like at every move, you know the mission, you know where point B is, and it's just about, how do I give myself the most options to make sure I have the best route to point B? Instead of, you know, getting concerned about at every single fork in the road, which one is the right choice. It's like, we honestly probably spend more time being concerned about how many choices do we have in front of us. Because if there's only 2, that's bad. Like, you need to have more than 2. You need to have as many as you can. It's like, you need, you know, if you're going to make the optimal decision or build the best thing.
We did have lower dilution deals on the table, but the people that we ultimately went with, I felt like clicked with the team really well and would like would truly help us accelerate our business in a really meaningful way. And so I think coming from like our purview of, oh, we're never going to raise because we're an indie company, to like, capital is a tool that
you can exercise.
It's just a tool in your toolbox to like build a business, and it's not always available to you. Like, I think we're pretty lucky in our timing of this. There's a lot of companies that don't. You know, if I was, 22 and I had didn't have kids.
Yeah, it probably makes sense to call out that you had twins right
like,
in the middle of this process.
But yeah, like a month ago. Yeah.
Pretty
Actually, to be
serious,
fair, having twins was the easy part. Taking care of them is is actually the hard part. So that probably took more time. Yeah, it was kind of surreal. Like
That was a crazy.
Yeah, that was, I mean, from my standpoint too, we're like texting about term sheets and then suddenly there's a picture of 2 babies in the group chat. I'm like, what? Did this seriously just happen? Like, are you talking about this stuff in the recovery room? What are we doing?
Yeah. Yeah, no, my wife is a machine.
You're a machine too.
Yeah, we're both really productive people.
Yeah.
You have time to plan, but I think when I left NVIDIA, I knew we were having a baby. I didn't know it was twins at that point. Yeah. But like, you have to manage those things. And it's like if you let them affect you, or you don't manage them appropriately, they will push you off.
Yeah.
I'm actually reminded a little bit of a concept that I think you associate with a lot, which is like you can always play at a higher level. Like there's always a tier higher if you can push yourself to get there.
Yeah.
And like it can be extremely rewarding, and it is difficult. And I don't think it's maybe the real world grounded version of like the grind set. You are a strong individual, and if you want to play at high tier games and you want to do that while having everything else in your life also be very intense, you can make it happen. And it's like all it takes is just focus and like intent at every single step. Yeah. And it, Will talks a lot about like it was easy for him to pick me as a co-founder because like he sees me as a talented engineer. It's like he knew that would be a big component, and it was a big element for him to like feel comfortable enough pursuing what will functionally end up being a very technical business. But I think there's a flip side for me, which is like I needed Will because Will's one of the only people I've met who feels like he can always play at a higher level.
Yeah.
It doesn't feel like Will steps down. Will never like has something happen and steps back and like reduces. He always like steps forward into more, doing more, making more. And it's like if you're gonna imagine the CEO and founder of a company that's like huge and very successful, those are like the key descriptions that person would have. I don't know, I guess we kind of deviated a little bit from fundraising, but I think it's just
went into pure like fanboy mode.
Yeah, I mean it's important to appreciate like where the skill sets are.
No, I totally agree. I mean, look, I feel really fortunate because I've had the chance to watch both of you step into like that next gear multiple times over the last 9 months.
I mean, I wasn't going to do this without Nick.
Like, no, I remember you brought him. I can't remember if it was our first meeting or not, but like, it
was second.
Yeah, I think that's right.
Like Nick was the only person that I want. Like, and I was like, Leah, if Nick says no, I'm not. I'm just going to hang out.
Yeah. Early on in this kind of fundraising process, I can't remember which of you sent the text, but it was basically like, are you going to, like, what does this mean if we raise money? Does this make us not an indie company? Oh, yeah. Will you not like us? Will you be mad? There was something along the lines of like, is this going to affect our relationship? Or what does this mean to us as an indie company if we end up raising money?
Yeah.
Where did that question come? Why did that question come up?
Well, I think because we like you a lot. Like we view you as on the team.
Did you think you were going to disappoint me?
Yeah.
Oh, interesting.
Like, you're on the team. We don't want to let a team member down.
Yeah.
Right? So I mean, we have a fairly active text. I would be surprised if we weren't first in your like.
No, it's almost all day, every day, which I love.
Yeah. So
and I know when things are really busy, when it like goes quiet for
So yeah, I think that was our purview. So we basically, it's not that we needed the permission, but we just wanted to make sure that we weren't going to let you down, given that it was also so new.
Yeah.
Right?
Were you surprised by my response?
I was going to bring up the data room again.
I'm sure you did.
I don't know that I was surprised. Maybe pleasantly surprised in the way that's like, I think it was exactly the sort of response that was another point of proof that like, we know we picked Indie and it was going to be a successful partnership. It's almost like a mentor who gets really particular and, is like making you focus on really nuanced things, and maybe as a person interpreting that information, it's really easy for you to like bond to it and think that that's actually what's important.
Yeah.
And then the second half of the movie or the third act comes along and it's like, no, that skill that I was showing you, that nugget that I gave you, isn't the important part. It was part of a bigger whole. So it's like I feel like you prepped us with the idea that fundraising should be more than a treadmill, and it should be a piece on the board that you play with, and that piece can be as important or as, you know, underperformant or as unimportant as anything else at any time, and it's going to shift on the board actively. So I think your response was something along the lines of like, there are no rules to this game, and I think that if you guys are in a position where you think it's valuable, then you have my full support. And it was just exactly the response you expect from somebody who understands that it's not about yes or no to fundraising. It's about fundamentally thinking about fundraising as just another piece on a chessboard and not the end-all be-all of this whole thing, right? Like, you don't build a company to fundraise. Don't make your company about fundraising. But fundraising is a very powerful component that can like help make you successful if you play your cards right.
Yeah, and I think one of the hard things to internalize until you've lived it is fundraising is infinitely easier when you haven't focused on it and when you don't have to do it. And so suddenly when you don't need the money is likely when most people want to give it to you.
And you have stuff to show.
And I think to your point, I mean, the way I've always thought about it is like in Karate Kid, you know, when Mr. Miyagi.
That's exactly what I was
Yeah, I mean, that's my move all the time, which is like, you thought, like, this is actually has never been about fundraising, it's about focus.
It's never been about painting the fence.
It's never been about painting the fence. It's never been about waxing the car. It's always been about just where you focus your energy. And I think, particularly with you two, the reason I could be so supportive and happy, you know, like genuinely enthusiastic for this is that I had watched up close for 6 months. You know, once you had a problem, you know, once you closed customers pretty early and you closed, you know, you were shipping product pretty early. But I was watching the trade-offs. I was now watching, like, most people, when they're at your stage, they're thinking about what do I have to prove to get that next round. What I saw in you two was, A, the caliber of people you'd recruited to the team with very little money, and then the kind of pipeline of potential talent that you had lining up to join. I saw not people saying, like, this isn't working, we got to figure this thing out, like, I think we got this wrong or we got this right. It was basically like, we are turning away business now because we just don't have the bandwidth, we don't have the people, we don't have... So what I interpreted, you know, one, all the investor interest and that decision to kind of lean into it was basically like, you ran the indie playbook. You know, you did exactly what we had talked about from the beginning, which is so rewarding for me to see, which was like, you built a real business. And not only did you build a real business, I think what I saw was like, you had taken that real business and you had grown the ambition for it 100-fold from where we started. But the capital now was an actual, it wasn't a lifeline, it was like an unlock to the potential that, you know, the kind of pent up potential that that you guys had created by, you know, just really focusing on doing the work.
It gives us options.
Yeah, I was gonna say we had to like learn to spend it because we come from like the consulting background where it was just like you work really hard, you more with less. So yeah, and actually we were thinking like, why did we even raise from Bryce? It's like, oh right, we like Bryce. You know,
yeah, that is a good question. Why? I mean, I certainly don't have any expertise.
That was it. We like Bryce.
Okay.
Like yeah, I think, you know,
if there's more nuance, you'd have to go back in time and ask me. Like the us we are
I know
today.
you had other
I'm not even the
options
same
back then.
person. I'm not even sure, you know, I could answer the question anymore.
Yeah.
It's like I feel like I'm happy with the decision and extremely excited about the future. And at the same time, it's like I don't even have time to worry. I don't even have time to worry about why we did this raise anymore. I'm like moving on. Like we did it. It's over. On to the next thing, I guess.
No, I think that's like VC people are business people. Like they can be really useful.
Was that useful at all through the process?
Absolutely. So it's, I don't think, yeah, maybe we didn't need to raise, but like if that's what you needed to
get on the team,
and we wanted that experience, and it's actually the same with the round we just closed. It's like I feel very good about that group of people.
What did you find at the end that you actually valued and that you wanted to bring onto the team in terms of you had options even now in this round, higher, lower, different tiers of funds, different vectors that people were differentiating or trying to sell you on. What did you find internally when you talked about this ultimate syndicate you landed on? What did you end up valuing and optimizing for?
I guess our lead, like they pushed our vision, like they matched our energy.
And it was kind of like a good Goldilocks amount too.
Yeah. And
like some of the tier ones were a little far and other people were too shy, and they just felt in the middle of like, hey, here's some problems, like, or not really problems, but like, here's some things we're going to need to think about, but like, it's okay, we're going to deal with it together. It's almost like somebody like wading you into water slowly. If like, if the water's going to be cold, but like, I promise it'll be great once we're swimming, but I'm not going to like push you off a diving board, and I'm also not going to let you like dangle your feet. Like, we are going to do this and build a company.
Yeah, and they were just really poised, and like they were competitive, like, and like, you know, game respects game. So it's like if they want to show up and they want to play, I love competitive people and who can.
No,
think,
it was impressive.
like,
I mean, just from the sidelines, it was like, wow, these guys are still in the hunt. This is impressive.
I mean, they effectively nailed the deal like right off the bat, and then we're like, hey, like we just met, we just learned about raising. Let us go run a process. They were like, great, like go run your process. You know, they were there from the beginning, and like we hit it off in the beginning, but it was like, you know, hey, I just met you, like let's go. We maybe weren't considering a raise. We had started thinking about it, but like we didn't know what starting that process would look like, and they were really the ones that were like, hey, we're interested, like let us give you money. You know, we're part of a portfolio of companies that we respect hugely. To be next to some of those.
So as the Pearce said, it was kind of the network they had, personal connection you felt with the people writing the check.
Yeah.
Maybe actually, I'll return to a thing that was like they, much like you, despite them maybe playing the VC game slightly differently or in a different subspace, they felt like the company. When you interacted with them, it felt like you were anybody that we met from them. That was who they were, and it wasn't like, oh, we need to have a chat, and then I'm going to go deal with this in the company back end, and then I'm going to come back to you as a person, and we can talk. It was like, no, you're just talking to us as the VC firm. And like, if we say something in this meeting, it can happen as a function of us being the business. And so I think that was at just a different scale or in an adjacent space. Another thing that we grappled is like, I don't want to feel like I like you as a person and don't like you as a business. I want them to be the same thing.
Oh, it's so interesting.
Yeah.
That's such a great juxtaposition. Woke up this morning and I actually had a minor panic because I was like, I wonder if Will told them about the U.S. Treasury scheme. So do you want to explain I genuinely like,
don't give them
I thought
secret.
this morning, I thought, oh my gosh, is Will going to do it? He's now got like
capital.
You know, he's got enough that, you know, probably not enough to float your whole team.
Oh, we're going to try so hard. We're in a market, like we're a capitalist society, whatever. Interest rates have been near zero, blah, blah, blah. Yeah. And now we're just in a different interest rate environment. So if you have enough money, you have infinite runway. Simple as that. So it's like, or you get to watch your best friend build the coolest stuff he can possibly think of, which show up and blows my mind every day. Like, isn't that the life? Like, that is the indie. That's the indie, right? Like, so I think, yeah, but VCs don't like it because they can't give you more money, right? Like, they don't want you, I mean, like, they need to mark you up as a company.
How does that influence this decision for you, if at all? Or how does it impact how you think about fundraising going forward?
I mean, I'm going to get to that number as soon as I can. Because
the infinite runway number.
Yep.
Yeah.
Because then that means we don't have to raise again, ever again.
No.
So I think that's like...
You know, you have my full support.
Yeah, absolutely. Well, it's like, and that's what I mean, is like...
Don't encourage it.
The indie, like, just because we raised doesn't mean...
Indie infomercial.
Just because we raised it doesn't mean, like, the philosophy is dead or different or dead. You know.
Now, that said, you are acutely aware of how much your competitors have raised. Do you feel like that influences your relationship to fundraising at all?
I mean, almost to a point. Like, I think there's a narrative that goes on in the market, which is useful.
Which is what? We've raised $200 million. You can trust us. You can...
Yeah, it's the, you know, it's cocktail party
fear us,
stuff,
right.
It's also, it's just weight that sloshes around almost. Like, it's not even like the confidence of saying, oh, they raised $200 million. That means something good or bad. It's almost like, okay, now there's a $200 million weight on the market. And depending on how that goes, that's going to, like, affect the whole narrative. You know what I mean? It's like,
Totally.
The 200 company, $200 million
The crazy
company.
thing is that was a $200 million bet on an idea from 3 to 5 years ago. And
2 years.
And as you guys know, like the market's moving so quickly, that idea could be a terrible one today. It could have never been a good idea.
I mean, our engineering philosophy is like, it's really dangerous to commit to a tech stack because everything moves so quickly. So it just goes back to that whole thing of options. Like it's the whole way down, like especially in our engineering, because, you know, you like look at all of the RAG stuff that was huge last year. And then Google shows up with a model that has a 1.5 million token context length. And what do you need RAG for anymore? You don't. You know,
And that's one move in the last 6 months, and things are still just
not to
barely-
mention it's like, oh, GPT-4 is amazing. Nobody's ever going to catch up. Anthropic's the laughing stock of and now they're crushing it. People laugh at OpenAI for becoming a product company and like building this whole voice thing. And meanwhile, you know, the Anthropic's models are absolutely destroying benchmarks, and in our internal work are like crushing it. Like it goes to show, it's like everybody's super confident until the minute everything changes. And it's like the more vocal you were, the more money you took on, the more commitment you made to an idea or a technology or a promise, the more embarrassed and the harder it's going to be for you to pivot. You know, so yeah, to Will's point, like optionality is everything for us. So the money and the amount, I mean, the narrative of people raising, they were all components, but for us it was all just, okay, how does this affect our options? How does somebody raising $200 million affect our options? Otherwise, I don't really care about it. It could mean anything. Does it mean that we're potentially more valuable? Does it mean that we're more at risk if they go down and suddenly we're looking less valuable? Like, it's all at play, but it's not like inherently good or bad. It's actively shifting all the time. Like,
and I would say, like, I have supreme confidence in Nick's engineering ability. When I was pitching, hey, we're going to take your money and we're going to put it in treasuries because, like, we are two of the hardest working people that you will ever come across. And Nick is easily one of the most talented engineers that you've never met or ever. All of the VCs that said no, like, they are going to have to compete against us.
oh, I'm really looking forward to it, by the way. Like,
Right?
so in 5 years, everybody's still going to be on the board and their positions are going to change. I'm excited. I'm really excited.
It was hard to communicate that to people. It's like, hey, like you can get on now and like whatever stuff you're dealing with internally, like you should deal with it and you should get on because we're not going to be here again. Like,
But I would imagine to the VC, they're like, yeah, everybody thinks that.
oh yeah,
You
for sure.
thought you'd never raise money the last time, you know?
Yeah,
Yep.
I think that's a big element too. Is like we felt, and I think everybody, I would imagine every founder, and so different and so varied. They probably go through the experience and have just like such stark contrast with VCs. And I think a defining one for us was like, we are extremely confident in the destination we're going to arrive at. You can help us navigate there to make the biggest outcome when we get there, but there will be an outcome, and it will be either big, very big, or monstrously big. And yeah, it was like weird to talk to people.
Well, I mean, what's interesting to me is like when you say something like that, they immediately associate with it less ambition and less drive to an outcome. Do you know what I mean?
Why is that? What do you mean?
I think it's endemic to the venture kind of farm system, treadmill, whatever you want to call it, that unless you're continually raising and building and getting that demarcation of progress in valuation, that at some point you'll never sell the business. You'll never exit the business. They'll never get their money returned to them because if you don't have that amount of dilution, if you don't have that amount of pressure from a board that's kind of continuing to move you in that direction. Frankly, there's just not a lot of examples of people who've bucked it. I mean, you've got Viva, who raised one round of funding and then got public, and it's now got a massive market cap. You've got the Trade Desk, which only raised like once or twice, and now they've got like a $40 billion market cap. But there's so few of those examples out there as opposed to these kind of cash incinerators that we've witnessed over the last 15, 20 years.
To what
The skepticism, I think, is probably earned by the VCs. Is somebody being like, I don't need you anymore.
Says the VC.
Yeah. And then, but that, I just don't think there's that level of discipline. Like, I think what I saw in your raise was because you weren't focused on fundraising, whether you recognize it or not, you basically got to skip 2 rounds of funding in terms of dollar amounts and in terms of valuation. You essentially jump straight to a Series A. And that's such a rare moment for an entrepreneur. Most entrepreneurs have to raise a pre-seed, and then they raise a second pre-seed. There, in most companies these days that are focused on fundraising, you're getting oftentimes 3, 5, 7 micro rounds of funding before they get to their Series A. You guys like jump to it immediately because you just built a business.
Pull it forward. Bring it forward.
Yeah, we pull everything forward.
Do it faster. Don't do
like,
it.
when you have like, hey, we'll do a meeting next week. No, we're going to do it today
Right.
or tomorrow. Like, you don't need to do it.
This afternoon.
This afternoon.
Yeah.
It's going to be ready.
Because, you look at that calendar and you're like, oh, I got, I have space. So if you can fit it in, just fit it in, like get it done. And I think, those things tend to compound.
Okay, so how do you guys think about liquidity then? Now, when I say liquidity, it's like IPOs, it's secondaries, it's...
For me, it's like, it's going to be awesome. And I don't know what it's going to look like.
Yeah.
And I don't know how it's going to pan out. Like, all we have to do is just like keep on this trajectory of like maintain options, assess the situation, take every single week as like a fresh opportunity to like make a change, make a shift, make a move.
I mean, we ship so much inference traffic.
It's insane.
That we're looking at like enterprise contracts
For a company of like 8 people.
Yeah.
The enterprise traffic is like all us.
Yeah, and they can't even, like their limits, they can't even keep up. Right, and I think that's the scale you need to get to if you're going to be that big. And that is the promise, right, of AI and GPUs and compute, is that you can do more with less.
Yep.
You have to know how to use it. Like I think there are not many people who know how to saturate a DGX. As it's like if I buy the same cleats as Messi, I'm not going to play like Messi. Right? Like if I buy a whole data center, like that doesn't mean that it's full of stuff. Like I think that's maybe one of the mistakes people make in this space is like, oh, I want to do AI, so I have to buy GPUs. Like, no, you scale into GPUs. Like they're hard to use. Like
you should be like yearning for them. You should have your problems like pushing the boundary of every other option you have. Maybe liquidity front for us, it's like we want to be as big as possible while being as small as possible in the sense of like doing the most with less. Like, I mean, maybe you could answer the question, but like it is my assumption that, and maybe it's my projection.
I don't actually think you have to answer the question. What I was trying to say is like, there's a bias in venture that somehow the amount raised is tied to the ambition of the founder and the ultimate outcome that they're going to build towards. And so when you tell an investor, this is the last round you're raising, again, the response is like, that's what everybody says.
Yeah, yeah.
But if it's working, we'll see you back here in 6 months to a year.
Yeah.
Or the flip side of that, and I think the position, knowing you guys, the position you want to be in is like, in 6 months, you're going to be hearing a lot more about us, and you're going to be coming back wishing that you had been able to get the deal that you offered before, but now there's several zeros attached to that previous term sheet.
Yeah.
If we do our job right, for sure.
Which is why I like raising from the people we did now.
Yeah.
Like they're in. Yep. They're all in. And they deserve to be in as a function of them being able to make it happen.
And they understood the market really well. And they like knew the trade. And it was it's like, here's an amount of money, here's valuation, let's run a Series A.
Mm-hmm.
Is it the most money you're going to get? No. Is it the least dilution you're going to get? No. But it's like, it's fair. And if you like us and we like you, then like, let's make it happen and move on and like go on to the bigger.
Yeah.
Well, my sense with them in particular was that they feel so much more aligned with the way you think about that optionality in building the business than, if you would have gone the mega fun top tier route, like you're really locked into, a fairly formulaic approach to how you build this business.
Are you the...
Practically no, theoretically yes. But meaning...
the VC motto.
Yeah, I mean, I think practically they can't force you to do anything.
Yep.
But spiritually, when they're coming to your board meeting and they're in your group text thread and they have more influence on your psychology than maybe you realize.
And so I think there's also this aspect of accepting your own strengths and weaknesses, and then like, yeah, like the conventional advice is like, you know, like work on your weaknesses. Like, no, don't. Like, work on your strengths.
Yeah.
Find people
that'll like complement your weaknesses.
So in selecting partners for the syndicate, what strengths did you optimize?
I think experience. The firm we chose is, in our perception, very shiny. Mm-hmm. So like, we're not very good at marketing. Like
oh, interesting.
We're like technical people. We're engineers.
Yeah.
Like, they're going to stretch us in that way, and they already have.
They're going to make me go to things I don't want to go to.
Oh,
but look good.
Events.
So
yeah.
They're going to make me sit down and do interviews and hollow business.
Okay.
Yeah, they're going to care a lot about how we present ourselves. Where
publicly
from our perspective, it's just like, hey, you like our code? Yeah, it's the best. Like,
come check out my GitHub repos.
It's you know. So yeah, I think that's from like there is no one better than like Nick.
Yeah,
there just isn't. So it's like they can't help there, but where they can help is like help us communicate, help us work through the things that we want to say.
Grounded ambition in the sense that like, I know you have a vision of where you want to get to, but the road is going to be rocky, and I want to let you know how it's going to be rocky and like start working on solutions. It's almost like they let you know the road's going to be difficult, but then they're going to be like helping you out. It's almost like a Sherpa or something. It's like, this is going to be a hard hike, but like, I've done it before, and this hike's going to be unique just like anything else, but I can like give you so just like grounded individuals who feel like they're doing a bit of the wax on, wax off, where they're like, we're going to maybe push or angle on these like particular things, like might be product market fit, or it might be the way you present it, or it might be, hey, you're not focusing on this one area of the market. I know you guys don't like it, but focusing on it will open up a lot of doors. And if you just listen to us and do that, like, we'll have better. And I think we're sorts of people who benefit from that. We're people who like to have somebody with a differing opinion in the room who's willing to say, hey, here's what I think. I want to help you out at the end of the day. So like, take this advice and do with it what you want. But I'm here to help if you want to take on the challenge.
You know, there's nothing quite like the process of pulling something out of yourself, or letting, you know, expressing something either you see in the future or values that you have, and embedding that into a company that I think is it's just such an important refiner's fire for individuals in humanity. I mean, I think you guys are going to come out on the other side of this both, you know, financially changed, but I think as individuals, I think you're going to find that gauntlet of experiences that you're going to grow in ways that you couldn't have any other way. And I just think there's so much value in that. And I think to be side saddle with like really exceptional people, to go through that with them, like, you know, I'm now 50 years old, and to have done that dozens of times now, to have that experience with varying degrees of outcomes, like, it's incredible to see what, you know, I've seen this experience break people, and I've seen it like completely reshape who they are and reveal parts of their personalities or dispositions that, you know, would have never been revealed had they not gone through it. So it's just such a gift to be on the ride with you guys. I mean, I've said it, you know, in person, in text, like, I genuinely love you as individuals. I'm so grateful that we have this shared experience now, and I genuinely have no idea if I've added anything to the experience other than a listening ear, an empathetic, you know, partner as part of this. But you know, I'm sure grateful.
I mean, we don't even know if we're going to return you any money. So, like,
I know you are.
Been along for the ride. We're just getting started.
That's what I was saying.
We just started the car.
Yeah.
It was the friends we made along the way.
Right.
That's like our internal sort of motto. It was like,
God, is there a pun there?
It wasn't about the returns. It was about the friends we made.
Well, we hope you enjoyed that conversation I had with Will and Nick from Dreadnode. As you can see, that led, you know, their experience with us led to a really successful Series A, and hopefully it's put them on the path to success to win. If you see yourself at all in this conversation, either as technical founders or as in area expertise looking to spin something up into a company, or just the ideas behind Indie resonate with you and how you think about building, we hope you won't hesitate to reach out to me, Bryce at indie.vc. You too can slide into our DMs, and maybe you'll be the next indie funded company too.